Hi, I'm Graeme Carson from RaaS Research, and today we're joined by Ben Fash, CEO-elect of Fluence Corporation. Welcome, Ben.
Thank you, Graham. Appreciate the opportunity.
Pleasure. Now, can you give us an overview of what Fluence is today in regard to the industries in which it operates and the solutions and products that you provide?
Absolutely. Fluence, first and foremost, is a global company that's focused on providing modular and decentralized water and wastewater treatment solutions to customers across numerous end markets. And I think it's important to note that we're quite unique in that for the size of the company, we have the technical capabilities of a large diversified water business, as well as an international footprint that has allowed us to deploy these advanced solutions around the world, as we have for decades. Because of that, Fluence is a trusted global brand in water and wastewater treatment solutions, and we have over 1,000 installations deployed on every continent around the world. I think that's important context. We go to market today through four key business units, which are municipal water and wastewater, industrial wastewater and biogas, industrial water and reuse, and our Southeast Asia and China business unit. Let me take a second to just touch on what each of those business units sells and where they sell those products. Municipal water and wastewater is focused on providing drinking water and wastewater treatment solutions. Our wastewater treatment products are centered around a proprietary membrane aerated biofilm reactor, more commonly known as MABR. And that's a proprietary membrane technology that is, we believe, the most cost-effective method to treating nitrogen and removing nitrogen from wastewater effluent. And now, nitrogen is a nutrient that is causing significant harmful downstream effects like algae blooms, very detrimental to aquatic ecosystems. And around the world, nitrogen and other nutrients are the focal point of regulatory bodies in setting regulation around wastewater. We sell these solutions primarily to municipalities, government entities, developers, and resort owners, and are primarily focused on North America as geographically, as well as the Middle East. Industrial wastewater and biogas, which treats high-strength organic wastewater to meet really ever-increasing regulatory requirements. But more exciting, we can actually design a system that not only treats a customer's wastewater to meet compliance requirements, but can then use that effluent to generate renewable natural gas, which can then be used to power their operations or be sold back to the grid. These solutions really provide a tremendous payback to our customers. And if you think about it, they turn a compliance headache into an economic asset. We sell these solutions to industrial customers in the food and beverage markets like meat, fish, dairy processors, as well as agricultural customers like poultry farmers. Industrial water and reuse is a business unit that focuses on providing processed water, reuse, and recycling solutions for industrial customers. Put simply, if our industrial wastewater and biogas business treats the water that comes out of the back end of a process, industrial water and reuse focuses on the water required at the front end of an industrial plant. So our solutions include ultra-pure water applications to meet very exacting requirements, as well as fully closed-loop reuse and recycling systems that help save our customers millions of dollars. So the industries that we serve are quite diverse and can include some recent examples with semiconductor manufacturers, power plants, refineries, food and beverage companies, AI data centers, lithium miners, among many others. We're primarily focused in that business unit on South America and the United States as well. Southeast Asia and China is our only geographically focused business unit, and historically was focused on the municipal market in mainland China through government-funded projects. It's really where Fluence got to cut its teeth with its MABR product line, and where we have over 300 installations. Unfortunately, the fallout from the collapse of the property market in China has led to government funding really drying up for these types of projects. The company has pivoted in recent years to focus on other markets in Southeast Asia, like Taiwan, Vietnam, Cambodia, South Korea, and the Philippines. And we've experienced some early successes. We've also expanded our product offering in the region to include industrial product offerings, like I mentioned previously. For example, one of our more successful recent projects was the Tau Bay Water Recycling Facility, where our solution took and converted municipal wastewater and converted it into an ultra-pure water source for a global semiconductor manufacturer in Taiwan. We believe that we can really have further success in the region with both a more diversified product offering, as well as focusing on other countries outside of mainland China in countries like Taiwan, Vietnam, and Cambodia. I think it's important to note as well that all those products and water and wastewater treatment solutions are delivered in a modular, decentralized format. And that really helps to minimize the footprint, lower the overall infrastructure investment, and really overall total cost of ownership for our customers. It's why it's an attractive product line, and frankly is a higher growth segment in the water and wastewater treatment space. And lastly, across all these businesses, we're providing operations and maintenance services, aftermarket parts and consumables such as chemicals. And this really has the dual benefit of ensuring, our customer success on our projects, while also providing a pretty valuable stream of recurring revenue at high margins. We are continuing to expand our ability to provide water or wastewater treatment as a service through rentals, leasing, build, own, operate delivery models, all of which will provide valuable services to our customers while growing that recurring revenue business, while we're growing recurring revenue in our business.
Okay, thanks, Ben. It sounds like you're developing a pretty clear strategy, but when you joined the company around 3 years ago as CFO and part of a complete new management team, I think the business, it's fair to say, faced challenges both structurally and financially. The team went about recapitalizing the business. And can you tell us then what sort of the major changes you've made within the business over that period?
Yeah, no, it's a really good question. And when I joined the company 3 years ago, I was aware of some of the challenges the business faced and knew we were facing a turnaround. So, there have been many significant changes that we've made over those 3 years. I'll do my best to summarize some of the key ones that are most notable. First and foremost was taking action to reorganize and simplify the business. Prior to 2023, the company was really set up as 13 geographically focused, kind of subscale businesses, all of which were really, not communicating, not collaborating. There was really no global coordination. And our reorganization focused on bringing what we did best and what we were most competitive in into product and market-based business units. And that really had kind of the dual benefit of enhancing collaboration across our global business and being able to take our products to more end markets and more geographic markets, as well as simplifying our business and reducing administrative costs. And speaking of which, I would say that's probably the second main action that we've taken, which is around cost rationalization and right sizing of the business. And this included several restructurings and headcount reductions. It was shrinking our overall real estate footprint. We divested non-core businesses, for example, the aeration product line in the United States. So all in all, our SG&A fixed cost base today is about 25% lower than it was in fiscal 2022. And so while there are selective investments that we still want and will make, by and large, the cost base that we have now, which is under 20 million, is sufficient to grow the company to 100 million of revenue and beyond. So that was really important to kind of get our cost base in the right position to lead to profitable growth as we focus on those core business units I mentioned before. Thirdly, we really focused on enhancing our contracting practices, for bringing in operational discipline, and more stringent controls around the business. So what this is leading to is better pricing, better payment terms on our contracts, and an overall lowering of the risk on these projects that we're taking on. We are really only now starting to see the benefits of those more disciplined contracts that we've been negotiating, which we're seeing with more profitable and higher cash flowing projects, really starting in 2025, and should benefit us going forward as well. And you can see that, like we've seen our gross margins go from 23% in fiscal 2022. In 2024, those gross margins were up over 30%. So significant benefit in terms of the profitability of our business already. We've taken steps to increase the recurring revenue in our business. We've talked about improving the service model, providing O&M services, selling more consumables after equipment sales and things of that nature. And as a result, our recurring revenue has gone up by more than 30% since fiscal year 2022 as well. You mentioned it before, but I do think it's one of the most important actions we took as a management team, is realizing that we needed to recapitalize the balance sheet. And as a result, we brought in really supportive long-term investors that are here for the long haul and see the opportunity that Fluence presents. We raised over 40 million Australian dollars. We replaced a large kind of historical legacy shareholder from the cap table, and replaced it with folks like Doug Brown, who is a water industry veteran, Nicholas Oldendorf, and several other supportive long-term shareholders that really took meaningful positions in the company and remain really supportive of the direction of the business. Mr. Brown and Mr. Oldendorf themselves currently serve as directors of the company, and with Mr. Brown as chairman of the board. So I think our shareholder base, our board of directors is far more aligned with the direction of the business going forward. With that capital, as well as improving the cash flow in the business, we've been able to repay debt. So another key action was refinancing the pretty restrictive and expensive Upwell debt facility, which totaled 30 million. And we had an interest rate of over 12% on that line of credit. And since then, we've also reduced the total debt in the business by over 10 million as well. So as a result of that, our interest costs are over $2 million lower today than they were in 2022 and 2023. And additionally, we've, as a result of some of the contracting practices and greater discipline we're bringing, operating cash flow in the business is stronger than it's ever been. In the first half of the year, we were over 5 million in operating cash flow, and we expect it to be positive for the entirety of fiscal 2025. And that's the first time since this management team arrived that we can say that. And I think lastly, and it ties really everything together, we've kind of established a one Fluence global approach, which really, how have we done that? It's by adding key global leadership roles, like a global director of human resources, to ensure that we are attracting and retaining the best talent. That reorganization that I mentioned earlier focused on improving our global coordination, collaboration, our reach, revising our core values across the business, and aligning business systems, processes, et cetera. So we are truly operating like a global business instead of a number of regional silos.
Yep. Yep. Okay. There's a lot been achieved. Now, so congratulations. You've now been recently appointed CEO. And I know the strategy has largely been set and now it's down to the execution, but can you explain what, in brief terms, that strategy is and where you think you are along that journey at the moment?
Sure. Yeah, and look, first of all, thank you. I'm very excited and humbled by the opportunity. The confidence that Tom and the board have shown in me to appoint me as the next CEO of Fluence is truly, exciting, and I can't wait to, fill Tom's big shoes. And that's, I think, the first thing I would say is I just would want to thank and express my gratitude to him. He's provided such strong leadership over the past few years, and he's helped turn Fluence around and put us in the position to really realize on Fluence's true potential. I myself, I've personally known Tom for 13 years. I consider him a mentor, and he's obviously had a very storied career in the wastewater treatment industry. So I'm really glad he's going to continue to be around to advise myself and the company and the board of directors after the transition. But like you said, I joined Fluence to work with Tom, among other reasons, of course. We've always been very aligned on the best way to run a business in this industry. And as such, the strategic direction of Fluence will not dramatically change once the transition is complete. I do, however, believe that Fluence is at an inflection point in its journey, though. I believe we kind of are at that point where we need to make the shift from an internal focus on fixing the challenges of the past to one that is perhaps more outwardly focused and that will drive our growth and sustainable success going forward. So, I've really aligned our strategic focus, which won't be significantly different than what we talked about before, focusing on our core business units, as mentioned, transitioning to higher margin product lines, recurring revenue. None of those core things will change, but our strategic focus kind of going forward will be really driven by kind of five key tenets, which is, I think we need to really focus on aggressive but responsible growth, double-digit growth at minimum across each of our core product lines and business units, while at the same time remaining disciplined and not, making mistakes of the past. We want to focus on operational excellence, driving high margins across our businesses. And given the technology and product portfolio that we have, there's no reason why that can't drive higher to 35 and 40%. Continue the One Fluence strategy to align the organization to be a true global powerhouse in the water industry. I want to hire, train, retain the best team in water. Bar none, that is how you build a great business, is with great people. We'll continue to add in that regard and try to attract and retain the best people in this business. And I think, as mentioned before, there's still a few legacy issues that we will want to clean up and put behind us, but the goal will be to be done with that by the mid to end of 2026, and we can truly focus on the sustainable growth of the business going forward.
Great, thank you. Now, it looks like you've got a proven product suite and proven solutions. You work in a number of geographies around the world. Where do you see the key opportunities, and what are the main drivers of those sort of opportunities? For example, is regulatory change very supportive, and does that provide a tailwind? And if so, where?
Yeah. Look, as noted previously, for the size of the company, we have a pretty unique and enviable global footprint, and that provides us with several options. But that said, we believe the primary region for growth for our business, as we've stated, will continue to be North America. That's where we've focused our investments going forward, and we think that is the greatest opportunity, primarily because it's the largest market in the world, it's the most dynamic, and it is the best funded. So all of those reasons make it obviously an attractive market, and one where historically the company hasn't had as much success in entering. So I think that there's significant opportunity for us to benefit from success in entering the market. But very followed closely, after North America, it will continue to be South America, Europe, and Southeast Asia. We think those other three regions will be important secondary markets for us and drive a lot of growth. We're seeing that success, for example, in both our industrial wastewater and biogas and industrial water and reuse business in Brazil, for example, which is another strong growth market. Regulatory changes will be one of the growth drivers, of course. It's just that is always the case in the water industry. I'll give you a couple examples. In the U.S., we're seeing significantly more focused on nutrient removal and wastewater effluent, especially nitrogen and phosphorus. And our MABR technology is, we believe, the best-in-class solution for supporting municipalities in meeting their compliance requirements around nitrogen removal. Another example would be compliance standards related to industrial wastewater, especially food and beverage manufacturers. These high-strength wastewater streams are, clogging up, municipal wastewater treatment plants or discharging into water bodies that need more advanced treatment. So that will of course drive additional spend and investment by our customers to meet those standards. But I think there are a lot of other aspects that are driving demand, and we are seeing that. And those are actually more based on economics and drivers of I would say cost savings or growth within a company's business. For example, our water reuse and recycling solutions, are supporting heavy water users like semiconductor manufacturers and AI data centers. They need more water. How are they going to get that? Well, when you can get creative with advanced solutions like recycling or reuse, that opens up a whole bunch of different avenues. Or our wastewater to energy solutions, basically meeting a compliance requirement that you have to meet anyway, but generating a source of potentially revenue or cost savings, the payback kind of speaks for itself. So I think that there are a number of economic drivers with the product line that we have that are quite attractive as well. And I think the last point I'd make is, in the markets that we're focused on, North America, South America, Europe, and Southeast Asia, these are very large and growing water and wastewater treatment markets. In the segments where we operate, we believe the market opportunity is in the tens of billions of US dollars. So, for a company of our size, the reality is part of our growth strategy will be focused on how we take more market share in a pretty large and dynamic market.
Yep. No, thank you, Ben. Well, let's move on to a few of the numbers. Now, Fluence is a December year-end business, so you've just delivered your interim result. What for you were the key highlights in the first half?
Yeah. We had a very solid first half of 2025, maybe slightly behind our targets, but compared to 2024, really, really strong. For example, I'll start on our top line. Revenue in the first half of the year was 33 million, which was approximately 65% higher than the same period last year. Obviously, we had contributions from the Ivory Coast Addendum project, which started up after a number of delays. And so that supported it. But our SPS revenue was also 19% higher than the first half of 2025 as well, which is our core, equipment solutions line. The first half of 2025 was maybe slightly lighter than we anticipated, but there is an element of seasonality to our business. And we really expect to see Q3 and 4 continue to show growth within the year compared to the first half of the year. And realistically, the combination of the gross margins across our core business units continuing to perform well. For example, industrial wastewater and biogas, industrial water and reuse, they both improved their first half margins by 5.9% and 3.1% respectively. Municipal water and wastewater has gross margins north of 36%. So the strategic shifts that we are making are kind of paying dividends. And you combine that with lower SG&A and R&D fixed costs, which are down $1 million even from the same period last year. It resulted in us having positive EBITDA for the first half, which when you compare to the prior year where we lost $3.6 million, it positions us really well for a strong year. And all of those business units actually contributed to the growth in EBITDA. They all saw growth on their bottom line. So, as a result, we're continuing to hold our guidance for the year, which is 80 to 95 million of revenue, and EBITDA of 3 to 5 million, which would be, significant improvement over 2024. And I guess the last point I might make, which is I think worth highlighting, is on the new order front. July, we just finished our July results, and July new orders was our best month of the year. We booked over 10 million in new orders, and on a year-to-date basis, that's over 32 million, which is about 16% higher than the prior year. So again, the pipeline is healthy. We are seeing new order growth, and that sets us up not only to finish the year strong, but to enter 2026 in a really good position as well.
Yes. Now, and on that, I mean, you've maintained guidance for the full year. You mentioned, I think it was revenue of 80 to 95 million US and EBITDA of 3 to 5 million US. Now, you're only capped at 65 million Aussie dollars at the moment. Net debt's been reduced to around 8 million as at the end of June. But that will require a bit of a strong second half and at the EBITDA line to meet that guidance. You've obviously got very high level of confidence in doing that. What gives you that confidence?
Yeah, it's a really excellent question. I'd say the primary reason we have as much confidence in our ability to finish the second half of the year really strong is the amount of backlog or orders on hand that we're sitting on, which is at about 83 million at the end of July. If you take the year-to-date revenue that we've recognized, the backlog that is forecasted to be recognized through the balance of the year, and our basically run rate of recurring revenue, we're sitting on enough work today to meet our guidance. So as long as we don't meet any significant delays, we should be able to meet that guidance. And that's a great position to be in. We haven't been in that position since we've been here as a management team. And you combine that with the strong gross margins, the lower SG&A and R&D, the math pencils out pretty quickly to a pretty profitable year.
Yeah, absolutely. So look, nearing the end, but it does feel that all that work you've done on the turnaround, that this is the year that you've sort of bedded a lot of things down, and the whole story is starting to come together, and it's now positioned, to live ongoing growth at stronger GP margins. Can you talk about the pipeline that is sizable, obviously, because you do release it, particularly in light of the key strategic businesses? You've made mention of SPS, Smart Product Solutions already during our chat, but maybe just give a little bit of color around those pipelines and the opportunities that they offer you.
Yeah, no, I appreciate that. Look, we do feel like the majority of the difficult turnaround work has been done, and we are starting to be able to spend more time on the sustainable and profitable growth across those business units. Starting with municipal, the focus is on growing in North America, as we've mentioned before. That said, there are several key projects that we're bidding on in the Middle East that may come to fruition that could also benefit growth. But really in North America, what's driving growth of our pipeline and now resulting in new orders is growing our rep network, as well as investing in our sales team in North America. So for those that don't know how the market works in the US and in North America broadly, it's driven by independent sales reps that cover specific regions. They decide to carry your technology, your products on their line card, and you cannot go to market without a strong rep network. We've spent the last couple of years really improving and enhancing our rep network and adding to that rep network, and that's starting to pay dividends in a really strong pipeline that's gone up significantly since 2023. As a result of that too, the orders in the first half of 2025 in the US were up 70% compared to the same period in 2024. And when I look at the pipeline today, we think that there's the opportunity to potentially double our orders in the municipal US business in 2025. So again, it's starting to take hold. In industrial wastewater and biogas, that's probably our fastest growing business unit right now as we sit here today. Our growth focus for this business has been to take a leading global product line that really was only marketed and sold in Southern Europe for in the history of this business, and taking it to areas where we already had an operational footprint, like South America and North America. And this has led to a significant increase in demand. It's satisfying requirements in these regions. We're focused on the team building out like delivery capabilities in these regions to satisfy their government incentives out there, green energy programs, as well as new nitrogen removal laws in Mexico, for example, all of which support the product line that we're bringing to market. And so as a result of that, in the year-to-date period through July, our orders in industrial wastewater and biogas are up by 90% compared to 2024 through the first 7 months of the year. And the pipeline suggests that we're not done for this year. There's a very real chance that we could be more than double, on a year-over-year basis, and that we could end the year with quite a bit more backlog than we even execute in revenue this year, which will be a significant growth year as well. Backlog right now is sitting up over 50% higher as of July of this year than it was in last year. And again, we could finish the year where it's even higher than that. So it seems like the industrial wastewater and biogas business the demand is there right now. The pipeline is very, very strong, and the orders are now starting to come in after we experienced some delays in order bookings in kind of the first half of the year, the early part of 2025. Industrial water and reuse, I would consider it's our largest and our most mature business unit. And our growth there is focused primarily on growing in North America and in Brazil, really. The business unit is headquartered in Argentina, but really where they're seeing growth in South America has been in Brazil. We've had a lot of recent order success, a power order, food and beverage orders. And again, this is a global product line that was really only marketed in Argentina for a long, long time. And we believe that significant opportunities for future growth exist, utilizing that North American footprint. The presence in Brazil was established several years ago, and we're now really just now starting to see it be the biggest driver of growth for that business. Our orders through July are up 17% compared to the prior year. So maybe not the 90% you're seeing in industrial wastewater and biogas, but still really healthy and strong. And they're forecast to finish the year even stronger, perhaps in the first half in terms of orders. What we like about that business is it's quite stable, it's quite mature, it's very profitable. They're already at a double-digit EBITDA margin, and the growth opportunities really are taking a pretty proven product line and taking it to places where we're already operating. That's a model that's been working in industrial markets. And then I'd say Southeast Asia and China, that's really the only business unit where we're not seeing the same type of really strong growth. And I mean, we've talked about mainland China and the struggles that are there, mainly due to lack of or basically no government funding that used to exist to drive the MABR projects that used to drive that business. And we pivoted to Southeast Asia. We see a lot of opportunity there. It's really about us as a management team evaluating how to best position the business to really take advantage of those opportunities. But in the meantime, we have taken the actions of reducing costs in that region by about 60% compared to where it was a couple of years ago. So we're really looking to see how, where we need to add sales resources in the region to best set us up for success. Where are the highest growth regions? Is that going to be Taiwan? Is it Vietnam? And so those are the decisions we need to make over the course of the rest of the year to set us up for 2026 and beyond. I think the last point I might just make is, all of these key business units are delivering healthy and growing gross margins, and that's really critical as well. Like top line, yes, it's important, but if you're giving away your projects, that's not helpful either. I mentioned before, both industrial business units are growing their gross margins. Wastewater and biogas, it was up 6% compared to the same period last year. Water and reuse up 3.1%. Municipal water and wastewater gross margins north of 36%. So the strategy is working. We believe there's actually more upside because we still are really just scratching the surface in terms of that global operations focus, being able to drive procurement savings and execute projects even better. So, I mean, it's obvious why we chose to de-emphasize those CES projects, the Ivory Coast style projects that deliver margins in the mid-teens. And, as a result, like on a consolidated basis, our margins are up to about 27% this year, even though Ivory Coast is a significant revenue contributor right now. and that gross margin is below 15%, and we're still up close to 30.
Yeah, absolutely. Well, look, finally, and we've touched on this to an extent through the chat.
Mhm.
I want to talk about some milestones. So, as investors or potential investors, what should we be looking forward to, you think, over the next, let's say, 6 months?
Mm-hmm. Look, over the next 6 months, we are extremely focused on delivering on the guidance that we put out there, which is, the 80 to 95 million of revenue, 3 to 5 million of EBITDA. We believe that that's really, really important to sort of show that, the business is in a position now where it's sustainably profitable, generating positive cash flow, and can grow from there. So those are, I'd say, our primary focuses is delivering, positive EBITDA, 3 to 5 million, positive operating cash flow. I'd also add to that finishing the year with order growth of at least 25%, backlog of 75 million to start next year. So those are some of the key financial metrics that are really going to drive our focus over the next little while, and in terms of milestones to keep an eye on. Beyond that, I think we are still looking to round out our senior leadership team over the course of the next 6 to 9 months. We've talked about global operations leadership, and we've also been discussing the repositioning that we are going through right now in Southeast Asia. So having leadership in Southeast Asia to lead that business on a go-forward basis is going to be quite critical. And then as the balance sheet continues to improve and show strength, we think that there's an opportunity, obviously, to grow the recurring revenue side of our business through water as a service. But we also think sort of, strategic and accretive kind of tuck-in acquisitions are an important part of that as well. And so adding resources in the company to help us look at potential acquisitions is likely something that we would add to in the future as well. We'd like to stand up MABR membrane manufacturing in the US, or we plan to stand that up by the end of the year. We'd like to sign the O&M agreement on the Ivory Coast project. And then lastly, and this isn't within the 6-month period, it's a little bit further out, but obviously, we plan to refinance our current shareholder debt facility and bring in a new senior lender when that facility comes up for maturity in Q2 of next year. So those are some of the key milestones we have our eyes focused on over the next 6 to 9 months.
Perfect. Well, look, we'll wrap it up. But Ben, thank you so much for taking the time to join us. You've offered some great insights into Fluence. Congratulations on all the achievements you and the team have made to date over the past 3 years. Good luck in the new role, and we look forward to seeing the progress in the coming months.
Thank you, Graeme. I appreciate the opportunity to continue to discuss the Fluence story and why we're so excited about it.
Thank you. All the best.